Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Sebastian, COO of OptionPit, for our monthly options expiration and vol Q review. That has a nice ring to it, doesn't it, Mark? Welcome back to Trade Talks. Love the tie. And Mark, refresh the audience on why options expiration is key for traders.
I mean, especially the December, we're going through what's called quad witching today. We have futures expiring. We have index options expiring. We have equity options expiring. There is just a ton of paper that is expiring today that is coming on and off the books. We also have a huge rebalance on Monday with Tesla joining the S&P 500 that is really throwing markets for a loop.
We also had the Nasdaq-100 reconstitution taking place at the close, in which the companies are added and deleted to the index based on our methodology. Will that impact options expiration in any way? And what about vol Q, the volatility index that tracks the Nasdaq-100?
Right. Well, vol Q will see some small changes as companies come in and out, but that rebalance will absolutely affect volatility. If you look at volatility indexes, we're not down very much as a market, but they're all up. And the reason being is that we've got this big rebalance going on among the S&P, the Nasdaq-100 reconstituting. So yeah, today is a day where option markets are reacting and trying to manage how the changes in these indexes are going to affect the individual equities, which actually, if you look at vol Q, vol Q is going to be maybe even more sensitive to that, because it affects specifically at-the-money options. And at-the-money options are where you're going to see those bigger variances among the different components.
Let's talk about trends in vol Q. What's happened since we spoke last in November?
Well, since November, vol Q's been relatively stable. It's eased off some, but this week a little bit stronger. They tried to sell it, but we appear to be waiting on a stimulus and Georgia elections, and then I think Tesla, which is already a component of the Nasdaq-100, it entering the S&P 500 is having a pretty decent effect on implied volatility in the Q and the S&P as a whole, which is why we're seeing some firmness out of vol Q.
What are some strategies that you're looking at as we head into the new year?
Heading into the new year, I think that we have one more nice pop in the S&P 500. However, there are risks associated with that, right? We absolutely have a buy the rumor, sell the news potential on there. We have the COVID vaccine. As people start to get vaccinated and the economy starts to reopen, people are going to be spending money. We're going to see a lot of dollars into the marketplace. And the one thing that I'm watching is inflation. Now, as it comes to vol Q, I think that big rotation, the old economy coming on, maybe softens the weak economy. So you could see vol Q outperform VIX and some of the other volatility indexes, as I think the economy turning on is near-term bad for some of the major components of the Nasdaq-100, notably Amazon and to a lesser extent, Google, Facebook, and Apple.
Yeah, it's really interesting. It's like short VIX, go long vol Q. It's so, the different, even though they're both volatility indexes, you're absolutely right. They behave very differently.
Correct.
Mark, it was great to see you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.